So now we're going to take a look at the multiple employment situations that can apply in real life that, to be quite frank with you, rarely come up in RO3. So we're going to look at two connected jobs. We're going to look at unconnected jobs, two unconnected jobs, and then we're going to look at where you have a mixture of self-employed and employed income. But I think it's important just to understand the theory of this and the basics of this, as opposed to the complicated nature of the calculation of these, because you don't tend to get calculations across this piece in RO3. So where you have two connected jobs, well, that's straightforward enough. You simply add the salaries together and you essentially put the combined salary into the tax funnel, and away you go, applying the various different rates of primary thresholds and upper earnings limits, etc., to your NIC bill. So if they are connected, then essentially they're pooled. If they are unconnected, genuinely unconnected, then you can actually apply the primary threshold to both your jobs. So if you work in the day in a bank and you work at night in the pub, then technically you can apply the primary threshold to both of your jobs and have the first element of your earnings taxed at 0%. It's all about encouraging us to go, but to get jobs to make ends meet, really. If you're in a situation whereby that takes you into the upper earnings limit, then you can essentially elect for one of them to be your main job and one of them to be a secondary job, and that will mean that you can essentially defer the NICs in part on your second job and avoid overpayment, basically. So the main rate that you would pay is applied to your earnings between primary threshold and upper earnings limit, of course. The maximum amount that you can pay is essentially that figure of income based on the annual rate that you would pay. So you cannot pay more than a set limit at the main rate, even if you've got unconnected jobs. One of the fundamental pieces of information that we need to appreciate for national insurance is the position where we have multiple jobs. And we're going to specifically look here at unconnected jobs. So perhaps somebody that works in the bank in the day and at the pub at night, as opposed to somebody that perhaps works for the same company with two connected jobs. There are special dispensation that means that you can't benefit in that regard. But this can be to the benefit of a lot of people if they do have multiple jobs. So we're going to look at this in a couple of scenarios, but I think the fundamental thing for us to understand is that there is a maximum that the main rate national insurance contributions that can be applied. So technically speaking, this is the income that is between the upper earnings limit, shown on the screen, and the primary threshold, also shown on the screen. And the main rate changes from time to time. So this, as you can see here, is applied at that particular amount. It gives you a cap each year of which you can only pay national insurance at this main rate up to. It doesn't mean that you won't pay NICs above this, you could, but they will be at a lower rate. So let's look at this in a specific example then. Let's say you've got two unconnected jobs and both of these are essentially above the upper earnings limit, as you can see there. You won't need to pay the full main rate on both of those jobs. What will happen, in effect, is that both jobs can use the primary threshold. That's one of the real big features of this, which is to our benefit. So they can both have an element of income which is not taxed, essentially, to the NIC regime. And then we'll have a differential on our two jobs. So one would be elected your main job, and you would essentially have, effectively, the main rate applied to that and the excess at the lower rate. That would be job one. And the second job essentially will not also see all of its income applied at the main rate. You can see here in this example that the job 2 effectively has had a lower rate applied to the income because we've essentially already filled that main rate up. So that is something that's well worth working to understand. So if you are self-employed and employed, then it is possible to pay Class 1, Class 2 and Class 4. It's a highly complex area of this, but The only real reason or situation where you will pay all three classes is if you actually are not a higher rate taxpayer through your employment. If you are a higher rate taxpayer through your employment, your class 1 will mean you won't pay class 2. So this is highly complex, very unlikely to come up in the exam. But in a situation where you've got an employed individual that pays or has a salary above the upper earnings limit, which puts them into the higher income tax rate, then they won't need to pay class 2 because their class 1s would have already put a stamp in their book. You would also not pay any class 4 at the main rate. You'd pay that at the nominal rate on profits above the lower limit for that. But just a general basic understanding would be good here.